Good afternoon, everyone. I hope you all had a green day today if you traded. I'm going to go over the daily plan and the live commentary that I provided all through StockTwits. I do this every day. Here is obviously my StockTwits. I will leave a link in the description and you can follow me there. Without further ado, let's get into the day. So of course, we had CPI numbers come out. So I warned that I was going to release my daily plan a little bit later. I wanted to see the tape of CPI, what happened, and let it digest a little bit. So I believe my daily plan, I came out, it was like a minute or two before open. But before we get into so as soon as CPI came out, let me pull up the chart. Sorry. CPI came out, we obviously dumped a lot, and yesterday's daily plan, if you don't remember, I'll bring it up, but we had a buy zone that was yet to be interacted with at the point that CPI came out, and it was 55 to 60, and that was exactly the bottom for this bounce or initial bounce. So from there we had about 20 points bounce, or obviously $1,000 per E-mini contract. I didn't play this to take these kinds of trades, although, which I posted, you could see, first, here was the buy zone, obviously, this was yesterday's plan, but this was beautiful through the tape. People were starting to sell, buy a little early, which, always happens, and then we had this one last flush, thin volume nodes, everyone stopped out, thin tape. I try never to play news. Sometimes I will. And this is actually, if there is a time to play it, there is. Why? You want to see selling above or buying above where you want to buy, because chances are people who are first are going to be stopped out. So at that point, once you see this, you would have to set a limit here, because this happens immediately pretty much. So quick. That if you're trying to market in, I'm sure the spread is going to be wacky and you're going to get a terrible fill. So as soon as you see this building above your buy zone, you set a limit and wait for a quick wick, and hopefully you get filled. But if it kind of just bleeds down, at that point I would remove my limit, because volume then, if we're going slow, is going to be continuing down, and that is sellers moving down on the tape. So into today's plan, I said, let me touch actually quick on the screenshot itself of the daily plan. I didn't realize that my daily plan chart, which is this, doesn't overlay, or when I make drawings on other charts, they weren't overlaying onto this one. So we missed out initially on a buy zone, which I left here, which was 39.95, I believe, to 4,000. So it wasn't pictured here, but I did comment and I fixed it, and I showed that this was a buy zone that I was looking at. Just unfortunately, I messed up here. Regardless, let's continue on. I said daily plan, no sell zones here. Why? The drop from CPI left a 60-point volume gap. So as I've said countless times, when we have volume gaps, price, not necessarily immediately, sometimes they do, of course, but price likes to go back and fill that volume. Price doesn't like, or price action doesn't like unbalanced auctions. Once you go in there, balance it. Once we're balanced, price is happy, more volume is being done there, more market participants, the happier the market. So we had a 60-point volume gap, and for me to say where exactly in that 60-point volume gap where sellers were stepped in, it would I would be guessing, honestly. What I said was, if when price retraces there, we have to monitor the footprint to see where sellers step in. If it happens during the open session, I will provide live commentary. As we now know, it didn't. We pretty much sold out the gate. And then I said, why is the nearest buy zone still about 40 points away? 32 points away, but whatever. Why? Because we broke out of balance, as I was talking about. I talked about in yesterday's recap, and I spoke last week as it was happening in real time. You could see through the TPO charts, we had balance, we broke out of balance, tested balance, and now we were going up to find a new balance area. We did not find a new balance area. We did not find balance. So what's going to happen? We're going to come down back to where price knows it's happy to trade. And what's going to happen? We're going to test that balance. We're going to see if we're going to accept over it, hold it, and go back up to see if we could find balance. If not, we're going to accept into balance and be back in this range. As soon as we get accepted into the balance, pretty much you could have confidence that we're at least going to test the bottom of the range, and that's where pretty much bulls, if that were to happen, need desperately to hold. If we then lose that balance area, well, we're going to look for new balance, and that means we're going to start searching to the downside. Let me actually show that on the TPO. I feel like that is important. All right. So we can see here, this is the balance we were talking about. We broke out of balance in this day, came down, single tail, or this tail, this wick, tested it, accepted, came up, not establishing balance, and here we are. So yeah, my first level from here was 4,295. We had some things on the footprint that you could see, as well as even through the TPO you could see we had this on touch point of control. But execution wise, I'm going to hold off from sharing through the YouTube. Or what I mean is the exact things on the footprint that we could see. But let's go back to stock twits and continue on. So this is daily candle, and when we opened, as I said, we were continuing to sell. Now, you've heard me say so many times through YouTube, B-shaped profile is accumulation. But you also have to remember, what I also stress is that it's accumulation when we are in a zone that buyers are likely to come in. How do we know price or buyers are likely to come in? Well, that's when we use the TPO and footprint, market auction theory, all that stuff to have a good reading of the market. This was not a place I was looking to be active. So what this was to me, this was coverings from shorts that are higher. And not only that, we knew that this wasn't an interest we were looking at, but what also told us that this was just temporary pause before continuing down was the volume node right here. Look at how many contracts were transacted. We're not exhausted yet. We are just pausing. Every time we were coming into this volume node, sellers were adding like crazy. Coming into the buyers, not so much. So just signs that the footprint tells you, even though we're seeing what you might want to see if you want to go long, the footprint's always going to be right. You can't lie about transacted volume. That's why I like footprint charts a lot. If you're looking at something like Bookmap or the DOM or Dome, whatever you call it, the order book, don't get me wrong, you could trade. There are many traders who successfully trade on it, but my preference to the footprint is because it's transacted volume. Can hide it. On Bookmap or the DOM, you could have a resting liquidity on the book. That's thousands of contracts, but when we actually trade to it, you have to see if they're going to transact those shares. You have to see if it's real or they're just going to pull the order and spoof. Now, obviously, there's ways you could do that on the DOM and whatnot, but for me, I like the footprint. It's black and white. These contracts were bought, sold, or they weren't. I don't care if they weren't. I just want to see the transacted ones. Okay, so now to the 4-hour chart. I said, look, the profile should tell you a lot. You need to know these things if you want to do this professionally. So what do we see? We see temporary exhaustion with a B-shaped profile. What we do want to see, we are still not in the area that we want. So we're looking good, but we're not having everything we want to see. What else do we want to see here? Well, we want to see more of a bigger buying imbalance. Even though we have 6,359 contracts bought over 517, that's a big imbalance. But context. We still have 30,000 contracts being sold here, 27. We want to see bigger buyers. You really step up and they weren't at this point. Let me make sure this is on posts and replies. Well, okay. Just because I had some people, I ask questions when I post these things. Try not to, spoon feed everything that I'm seeing on the footprint. No one's going to learn like that. And I had a lot of people interacting with me today, actually seeing what I was trying to point out, which is obviously that's the point of me doing this stuff, is so people can learn. And that was great to see. Now we got what I was talking about. No surprise, stage is set now. Okay, so you could see double buy-in balance. Buyers are more active here. Stage is set. What do I mean by that? Well, buyers are going to have to defend their position in this area, and sellers are going to have to defend in their area. This isn't exactly what we want to see, though. We prefer to see them closer together, one, and buyers still have a lot of work to do. So stage is set, and we have to monitor the tape in this area. And sure enough, buyers, as they appear weak here, they could not add, and we continue down. Another sign that the footprint helps you with. So this was me just responding to people who were attempting to learn and see if they were right in their analysis, and a lot of them were, so that was really good. But I said such an important lesson here between here and the daily. Now, of course, I forgot that when I quote, I'm just calling this tweet, I don't know if stock twits call it twits, but I quote tweeted this post with another one, and I linked not only a YouTube video, but I linked a screenshot to a daily chart, but for whatever reason, I guess I can't do both. But my point is, so this is a 4-hour chart, and we have exactly what I was just explaining. We have some buying, not enough. We definitely do have selling, and we have exhaustion. So, if you're, as traders do, you get itchy, you want to see a trade, and you're like, okay, I have this lining up, but I don't have maybe one extra confirmation, but I still have 3 out of 4. I'm going to force the trade. I'm going to enter a trade that I should have. If you day trade, I'm sure you know exactly what I'm talking about. What helps with the footprint, even though this although it's not perfect, it still looks really good on the 4-hour. The daily is what helped us. So what do I mean by that? All of this volume on my daily footprint was the bottom 2 volume nodes. Although we see temporary exhaustion here, it's just temporary. We didn't see the exhaustion on the daily yet. So that's what the footprint helps us with analyzing 2 different time frames, or not even just 2, but multiple different time frames. Helps you stay out of trades. It helps you stay out of trades, but when you get in that mindset that you're going to make a trade, that all comes down to discipline. No tools or anything's going to help you. You're the one who clicks the buttons, really. So discipline. So I mentioned in the daily plan, I don't remember whether it was in the plan itself or commented under or beneath it, how my zones that I was looking to be a market participant were so far away from price, even though there was many price levels in there, that are valid to trade. But I didn't mention them because the last thing I want is someone to take a trade off of what I'm posting, but especially something that it's so much riskier than somewhere where I'm looking to participate in. So I didn't mention that in the daily plan, but right before we traded into it at 10:01, let's see where we were trading at 10:01. Let's pull up the chart and kind of go through this live of what I was looking at. So 10:01, I posted this at 10:01, but I still have to screenshot, type, and everything. So this was before we traded this, regardless. But I said 40.20 to 40.25 is one of those places I was talking about that can provide a trade, but remember, I said it is not worth it. Please wait for the higher quality trades. Practice your discipline. Again, I could give you the exact level trade is going to bounce off of before it happens, and you still could lose money. It's your discipline. You have to wait for the the when. Just because I give you the where, you need the when. One without the other is meaningless. So I said this can provide a bounce. This is so scrunched. But sure enough, it did. And I did post the tape, so we'll look at that. But I mean, even if you're just a normal, what I call a chart trader, we come into our level and hammer, showing some strength, regain it, and we're holding it. Look at all these wicks. And sure enough, it provided a 10-point bounce, or $500 a contract. I walked this through all live. I showed it, but I didn't take it just because all the signs are lining up. Trading long term is really all about discipline, and even though this is working or setting up, you just wait for the better risk to reward. You don't want to be in risky trades, and this was a 5-minute now. So we first came into the sell zone. People, market participants, were trying to buy this. Footprint helps us here. We didn't see what we wanted to see. There was no exhaustion yet. There was no huge buying imbalance, even though we have what looked like, before we dropped down here, what looked like a B-shaped profile was looking good, but we weren't seeing all the signs. And sure enough, we closed at 5-minute, I believe, at the lows, and then the next 5 minutes, as I will show, give the signs. But before that, I just want to say thank you to everyone. On StockTwits, I hit 250 followers today. It means a lot, as well as on the YouTube. I've been growing quicker than I ever have. I appreciate that. And if you're not subscribed, please subscribe. So let's continue on. Did I for sure have that screenshot saved? I don't know why it's not coming up, of the 40-20 bounce on the footprint. All right. So exactly what I said, that first 5-minute, that closed near the lows. So right now, we definitely do not want to be taking a trade. All right. Next candle opens. We have a buying imbalance. Interesting. Still on the sidelines. And we close this candle with a bid above the bid. We have to be conscious now of these sellers. These sellers are putting a lid at 40.25. This price opens. Look at this. We pop right above them, run their stops, and then we come down, thin tape at the bottom, buying imbalance. They're moving a bid up. It's go time. So if you're not entering there, maybe you wait for extra confirmation. Bid moving up again, you enter there. In that case, you're not getting the full 10 points. But if you're entering with the exhaustion right on the bottom, bid moving up, you did get the 10 points. So yeah, that was, all live, and that's how you read the tape. Yeah, I don't understand why StockTwits, if I quote something that I already posted with another picture, it doesn't pop up. That's frustrating, but it's my fault. There's more answering people. I believe there's a question that I said I was going to answer in the video, so I will get to that. I just got to find it. This was, people reading the charts correctly and interpreting what they should be. Where am I looking for? All right. So this is next up. This was exactly what we were just talking through. This is where you actually got the 10 points. If you took it off the bottom with the buyers, 10 points right at the top. And then, if you're someone who's scalping the tape, who could read the tape really good, you're taking this, long here. Me personally, I always take profit at 10 points. If it's a scalp, I'll probably take it shorter. But 10 points definitely going to be out of something like this, like a scalp. But anyway, next candle, we close this candle at the lows, somewhat of a bid, but we're closing right on the bid. See some exhaustion. New candle opens. We have a majority of the volume here. Pop above, thin tape, selling imbalance. Not as thin tape as we want. Maybe you are waiting on the sidelines, and then the perfect entry right here, zero print, double buying imbalance, thin tape, super thin tape, and that provided a perfect entry all the way down to, 39.90s, something like that. So footprint really helps you being able to read this tape. You could get really, really good at reading the footprint, and there's just some days where you are on it and you could take these price fluctuations, but in time, it takes a lot of work. So this is the daily, nope, this is a 4-hour candle again, and I was pointing out how much volume's underwater. So we have this, all these guys who are underwater, then we had the people who were just talking about at 40, 20, 25, trying to buy here, lots of volume, and they got ran over until we're coming to our buy zone. Nope. I said, surprise, surprise, someone's trying here right in front of the level. You could see thin volume nodes on the daily. That's all these people being stopped out. And now we're getting some buying right in front of our level, but pay attention to the transactions at the bottom. We still have lots of auction being, contracts being transacted back and forth. So it is a sign that we might go lower. Additional, we don't have a B profile at the bottom. We want to see buyers do more work, but this is how it starts. Okay, now this is another time we could scalp this. I said see how we could read the tape so clean. Temporary exhaustion into our level, buying a balance long, then temporary exhaustion again, cut the trade, take profits, good for 8 points. So what am I talking about? We're coming into this level and we get our zero print. People double buying in balance, people who are front running this, take it, we close above all this volume, we continue up. And when we're trending, this is the reason why I have these moving averages. I never take trades off moving averages, but they're good to gauge trends in a trending market. And sure enough, we come into the cloud, zero print, that's your sign to cut the trade. And yeah, it was good for 8 points. I said buyers doing exactly what you need to, so you could see here that they are adding to their position, but we're still transacting a lot of contracts on the bottom, meaning that we are likely to continue down until we see exhaustion on the tape. But still, they're doing exactly what they need to. We're building out these volume nodes. We're looking at the 4-hour chart. We see some exhaustion, see a nice B, but we compare it to these volume nodes. We're going to want this a bit bigger, but still, buyers continuing on. And you could see this was 37 to 46, almost 10 minutes. Meanwhile, I was posting a lot, pretty much non-stop. And then I kind of went quiet for a bit because I was just waiting. And you could see how much buying we have. And now finally we're seeing some exhaustion on the daily candle. So all of the stars are now aligning. But we still have this huge chunk of volume compared to still a lot of volume here, but only in 2 volume nodes. So we just got to compare the numbers. But buyers still doing what they have to do. I said I like what I see. Look at that print. We'll go into more detail later. So this is our 4-hour. We wick down. Nice exhaustion. Huge imbalance. And I believe this is around the time with that exhaustion I think I went long. And again, I don't know if I said here. I definitely have said in a different video. I've been sharing a lot of footprint, TPO, and kind of, or I've been touching the surface on these things, but still sharing a lot when it comes to execution that I'm not going to post on YouTube. For those that want to learn that, there's more to come soon. So buyers at the job, pressures on the bears to keep it down. Do you see where price will, at the least, travel if they cannot hold their position? So they added even more here. We still have our exhaustion. This looks great. We have a volume gap here, which is what I was talking about, that if we accept price into this volume gap, we are likely to fill it. So price is likely to trade to at least this 40-20 unless sellers are able to move down on the tape, which is what I was trying to do. I asked that question and people got it, so that was great. I believe I asked something else in there. No. But what I meant, you could see that this buying imbalance. This volume node is bigger than now the sellers, so the buyers did their job. We're going to pull into this volume node, and sellers are going to try their hand at defending their position. If not, they're going to get their stop popped. And 10 points in the money. So got the trade, 10 points or $500 obviously per e-mini contract in the money. I took half the position off, leaving the rest to run or stop at break even. Gave the level before open and provided live commentary through it. That's why I said stay patient. Levels are just levels until the order flow confirms. And when it did confirm, we took the trade, even though we were trading at that level for, must have been like 20-30 minutes, something like that. Believe that was everything. So that was the daily plan and the live commentary provided. Again, I've been saying the past few days, room is opening up. If you're interested, just email and I will save you a spot. I'm going to go into greater detail of footprint, market auction theory, TPO, and kind of the tips and tricks of all of them, and of course actual execution, because executions are what matters most. So see you guys tomorrow in the next recap.